In a relatively quiet week for data, investor focus will remain on US-Iran talks in the hope of a deal that can be reached that leads to a de-escalation and a reopening of the Strait of Hormuz.
The focus for markets and almost everyone will be the discussions between the US and Iran on the West Asia conflict and the Hormuz. The clear risk is the conflicting news coming on the status of Hormuz. Failure of a deal will undoubtedly hit risk assets and prompt a rebound in the dollar, as markets price the prospect of higher for longer inflation, weaker growth, and the Federal Reserve constrained from cutting interest rates. According to ING Markets, there are three scenarios for oil to keep an eye on. The outlook shows how a prolonged disruption to energy flows could affect inflation, interest rates, and currencies. Financial markets are taking a glass-half-full view on the crisis amid the ongoing ceasefire and reports of another round of negotiations between the US and Iran. But there are still plenty of ways this situation could play out. ING's refreshed base case, assuming that talks drag on, would prompt renewed US pressure. The American blockade of the Strait of Hormuz is a good example of this. But despite ongoing disruption, a deal is ultimately reached that enables more traffic to flow through the strait as we head into summer. In the base case scenario, ING bets that energy flows returning to 70% of normal through May and 90% by July. This scenario would see Brent crude trading between $90 to $100 a barrel in the current and next quarters. But the bank warned that damage to energy infrastructure will hamper efforts to return fully to normal. Alternatively, a scenario where prolonged disruption means flows return to only 60% of normal by the end of June, takes oil prices back above $100 and keeps them there for the remainder of 2026. Natural gas prices show further upside too. A more extreme situation where talks collapse and a sustained military escalation ensues keeps the Strait of Hormuz closed until the end of June, with only a steady recovery thereafter. ING bets that oil prices could go as high as $150 per barrel in the next quarter. What central banks do will depend on which scenario plays out. For now, rates are expected to be on hold as central banks will be in a wait-and-watch mode. In the US, the Fed has already entered its quiet period ahead of the April 29th meeting. But it will still be drawing headlines given Kevin Warsh's confirmation hearing to become the next chair is being held on April 21st. Once viewed as a hawk when he previously served as a Fed governor, he has been nominated by President Trump, who has demanded much lower interest rates from current incumbent Jerome Powell. Warsh will inevitably be questioned on how closely aligned he is with the president's thinking. Expectations are that the Fed nominee will indicate a belief that over time, lower interest rates make sense. However, preserving market credibility is of paramount importance and there has to be justification. Separately, investors will also look at Indonesia and the Philippines' interest rate decisions in Asia. Other key data releases in Asia include Japan's inflation and South Korea's GDP. Business Bureau, WION World is One.